There are a lot of ways to invest in the stock market today. And knowing that 2024 is going to be a sort of bullish year for the Indian equity market, what are the things that we can do as investors to make the most out of it? I think value equity provides a pretty good solution. Obviously, I'm biased, but the solution here is pretty simple, that why don't we start valuing our own stocks like experts do it? So we shouldn't really depend on what other people say about the stock valuations. We shouldn't depend on stock tips because they're not reliable. We shouldn't really depend on the media to tell us which stocks are going to go up and down because they have vested interests, right? So knowing that there's an equity bull run, what are the things we can do? I think the first thing we should do is look at the company fundamentals. And for that, we built this value equity sheet. And it's a very simple product. And right here, it says it's been crafted by experts from IIT, IIM, and MBB. And this is completely verified because me and my friends built this to basically use for ourselves, right? We simplified it into a three-click process with six different valuation methods. The reason this is needed is we find that most of the financial data out there on the market is supremely complex, especially when it comes to Indian markets. A lot of it is not simplified at all. So we figured out a way to utilize Screener for detailed comprehensive market data and then get that into our sheet, that same data, and simplify it for everyone. So very simply, the 6-in-1 stock valuation sheet just takes data that is publicly available about all these publicly listed companies and it puts it into these simplified Excel sheet models that gives you essentially a one-stop solution for what is the stock price of the company. So if our goal is to find out whether a company is overvalued or not, this sheet is the product that does it for you. As you can see, there's a early bird discount. Products like this are usually priced anywhere from 2,000 to 5,000 rupees. But because we basically have no customers at this point, we're giving it away basically for free at 299. Let's give an example of what it looks like. So I've just moved to screener.in over here, right? Now I've taken an example of a company like ITC and I have lots of data to sift through over here. If I just open it up in the very basic summary, I can see at least 25 different ratios and things like that. I obviously have access to the price charts and I can see that the 10-year price has gone up for ITC. But this doesn't really tell me anything. I don't know much about the company fundamentals at this point till I really deep dive and go into the P&L and the balance sheet and the cash flows, shareholding pattern, etc. And if I really want to do some more research, I can go and look at the annual reports, right? Now, the annual reports will basically tell me everything, but that's a very, very complex analysis for me to do. It's more than 400 pages, as you can see, right? So what does value equity do for you? Value equity gives you this Excel sheet, you buy it, you download it, and you upload it back onto Screener. Now that is a two-step process. It's very simple. I'm going to skip over that process for now, and I'm just going to export to Excel, right? So I'm just going to download ITC after going to screener.in. Now I've already done this, so I'm just going to open it up in my Excel right now. The value equity stock valuation sheet starts with quick links and six different valuation models here. So I'm just going to quickly go to the six valuation summary. As you can see, the pre-filled values for ITC are fairly low. Now, this is to be expected because the explanation for value investing is all about taking conservative estimates, right? So we've taken very conservative estimates and it's giving us an average stock price of 198 compared to what it is at 468 today. But this is something that is not there on Screener, right? So if I quickly go back to screener.in, nowhere does it tell me anything about what does the valuation of the stock look like. What does it imply? So those are things we have to calculate for ourselves. If you have to be slightly more financially objective about it, the main shortfall of Screener is that in the cash flow we only have cash from operating activity and we don't have free cash flow metrics. So for a real finance person, they're going to have to build the free cash flow model from scratch. And this is exactly what value equity does for you. It is completely automated. All of this stuff is filled. As you can see, more than 122 cells are filled. And from the snapshot of the company, it fills in all the models, whether it's discounted cash flow, the Dhando investor method, the dividend discount model, the Ben Graham model, all of this stuff. And there's more than 7, 8 sheets over here that will help you come to the right valuation. I'm going to make a separate video on how to go around changing these values to make it more in line with current realistic expectations. But as of now, this is a very, very good and simple way to just see or get a sense of what does the stock price, what does the market value the stock price at.